I am Danny LeBeau, and welcome back to the Fourth Revolution Quarantine Edition. Today we'll be discussing some of investors' rotation into value stocks and the FOMO that is driving this rotation, as well as the 300 level battle we've been seeing today between the bulls and the bears. So the first thing I'm going to look at is investors' rotation out of some of the more drawn up and more run up tech stocks in the NASDAQ 100, which you can see here in red, compared to the candle bar chart you see is the Dow Industrial Average, which just has more of the legacy value names that are a little more cyclical, but still have pretty strong balance sheets. So there's been a growing spread. It's at about 17% right now. And actually, today and yesterday, we've seen this spread close a little bit as these value stocks move further and further up. And a lot of this has to do with investors pulling profits off the table from the NASDAQ 100. A lot of these stocks have reached all-time highs, if not past all-time highs, which they hit in March. And investors are thinking the market's a little bit stretched in valuation and are going to move towards some of the companies that have not recovered as well. And you can see here the three that epitomize this undervaluation in value is J.P. Morgan, the leader of the bank stocks. And you can see Delta, the leader of the airlines, and Carnival Cruise. These have all been hammered and really have not recovered from the initial market drop. But over the last few days, each of these stocks has risen about 15 to 20%. And the broader tech market has dropped a couple percent. So investors, I think a lot of this has to do with FOMO. People are seeing tech stocks as overvalued right now, considering the push up that we've seen. A lot of these tech stocks have recovered 50 to 100% since their lows. And the runway for upside potential is really disappearing quickly. So investors that missed out on that quick run up that we saw in the last 2 months are looking for a value proposition to invest in. And are looking at these overexposed companies, J.P. Morgan, Delta, and Carnival Cruise. And I really don't think this is justified. I think this run-up is just an example of, like I said, FOMO in the investing world. Investors not wanting to miss out on another upside in the markets. But today we are battling between the bulls and the bears. You can see this as the S&P 500 battling it out at the 3,000 level. So we've been trading quite up and down within that level. Earlier today, we fell all the way down to 29.69, and we bounced back up to the 3,000 level. And it's the battle between the tech moving down, as you can see. This is NDX, the NASDAQ 100 is down almost %, and S&P is up marginally, but the Dow Industrial is the real driver here. So like I've been saying in my previous videos, I think the market is quite stretched right now. I think we're hanging by a thread, and any unexpected bad news that hits the markets could pull us down anywhere from 10 to 15%. I mean, obviously, there could be another level of fiscal and monetary stimulus that could push us further. But I mean, we're looking at 25% plus unemployment by this summer. I don't think we can move much further. And these overexposed cyclical stocks and value stocks, I do not think are the move right now. And I would not be chasing this rally. So thank you for watching the Fourth Revolution. And don't forget to like, subscribe, comment, and check out Zacks promo. This week we're looking at insiders trading and what they know about the markets that we don't. So check that out at zacks.com/promo.